All right, welcome back to Market Day Report. I'm Scott Shelly, otherwise known as the Cow Guy. Great to see you here on this Monday morning. Thanks for tuning in. If you're just tuning in, but if you've been with us all day, it's my job. I'm here to make you stay. Let's take a look at what's going on in the corn market. Let's take a look at that board. Up 6 1/4 in the front. That's July. 7.85 is last. 3 cents off the highs. Dace is up 7 cents to 7.39. It's a penny off the high there. So we're going to call that a good corn board. What's going on though in soybeans today? This has been a little bit more interesting. 17 cents lower in that July contract to 16.88 1/4. We're about 3 cents off the lows there, and then go out to Novi new crop. It's lost 4 3/4 cents to 15.17 even, and that's about 4 1/4 cents off the lows there. So we'll keep an eye on that one. How about wheat in Chicago? Chicago wheat market is higher, 20 3/4 cents higher in that July. 11.89 1/2 is last. Even out the defers, you gain say 23 1/2 cents in March to 12.03 1/2. Okay, how about the hard red wheat in Kansas City? That's another one that we want to take a look at. Here we go. July's up 27 3/4 cents to 12.80 1/2. And that is not far, like say 2 cents off the highs. That's not bad. March is up 23 1/2 cents itself to 12.83 1/2. Okay, spring wheat. Let's see if that's got something similar to what we've seen in Kansas City and Chicago. And it does, just not as much. So we'll take it 16 1/2 cents higher in that July contract to 12.95 1/2. We had a 13 in front of it earlier at 13.05 even. So we got some work to do to the upside. But 12.95 1/2 is last. Right now, that's up 16 1/2 cents. March is up 17 3/4 cents to 12.91 3/4. And then finally, let's take a quick peek at what's going on in cotton. Cotton's up 99 points. Gave back a little bit here as of late. 143.26 is last. And that's in the upper end of the day's trading range here. 144.95 is the high. All right, let's bring in our next guest analyst. That's Todd Horowitz. He's with Bubba Trading. Todd, thanks for being on the show on a Monday. I really appreciate you coming on. He's in Chicago. What are your thoughts about these commodity prices?
Well, I think they're going higher, Scott. I think we just go through these rotations. You know, the volumes are really thin. And I think that they reach a certain peak, and then they kind of flatten out for a while, and then they start to take off again. I think that's what we're watching. The continuation of an uptrend that is only going to become bigger, I think, because, again, the surrounding details around all these suggest that they can only go higher from here because of all the input costs, the lack of food. I mean, there's guys talking about famine by the end of the year now. I mean, these are serious things that are happening that really get very little press when it really comes down to it.
Do you think Mother Nature, now that we're getting some of the stuff in the ground, is going to be playing a bigger role than the other things that have been up till now?
I think so. Listen, Mother Nature is always a very key thing here, especially this year because of what happened in Australia and Brazil and now in obviously Russia. I mean, Mother Nature can play a huge part in this year's action. And if we have any troubles whatsoever, these prices will explode higher.
Yeah, and we've also talked about, say, and you mentioned it, right, a famine. There's probably every reason to believe that we'll produce enough to feed the world, but the problem is getting it where it needs to go because of what's been happening to the supply chains and the likes of that. Would you agree to that?
I would 100% agree with that, Scott. I mean, you could get a lot of things done if you could get yourself and get your supply chain in order and get your house in order, but that doesn't seem to be the case. And it doesn't look like that's going to clear up anytime soon, which again leads to higher prices once again because you can't get them. So the demand becomes much higher and much firmer, and people start chasing after them.
Yeah, and it's always going to be part of that fuel and food issue. It's not one of those ancillary things that kind of trades around that because food and fuel are the ones that are really kind of taking off in price. Wouldn't you agree?
Look at they go to crude oils. They had it up big and then it is down. Now it's up again. I mean, crude looks like it wants to go to new highs, Scott, which is a problem. I mean, again, we have all these issues, and we're coming into driving season. Demand season is coming now. So you add the price of fuel. You take a normal person with an average salary. How are they going to live? How are they going to be able to buy all this stuff, and especially at the prices they're going to be? I mean, I wouldn't be surprised next year to see a loaf of bread at $8 to $10.
All right. Stay right there. We're going to go away. We're going to try to pay some bills here so we can eat too. We're going to be right back to talk to Todd Horowitz, livestock, after this. All right, welcome into Market Day Report. I'm Scott Shelly, otherwise known as the Cow Guy. Thank you very much for sticking with us through the break. Let's get right to these markets because ultimately these markets are your money, right? And that's what you care about. Let's take a look at live cattle in Chicago. That June market's up 75 cents to 132.32. Look at that. We're only about 13 cents, 12.5 cents off the highs in June live cattle in Chicago. We're up 75 cents. It's quiet, you know that. And we've got a 40-cent gain right behind it in August to 131.95. And we kind of lose some real estate as we go out the deferreds, ultimately to February, where we have a 2 cents loss at 5 cents a nickel lower at 148.50. All right, let's take a look at feeders. What's going on with feeder cattle? Well, we've got August is up 55 cents to 164.47, and we're in the middle of the day's range, really quietly steady, better, I would call this, right? But this one, as you go out the deferreds, you actually gain a little bit of real estate. November's up 77 cents to 172.10. How about that? All right, this is the big question of the day, really, is taking a look at lean hogs. Lean hogs, are we putting in a low? Have we carved out a low over these last few days? We've got June up $1.12 at 110 even. That's 35 cents off the highs there. And we've got July right behind it up $1.22 to 110.22. Let's bring in Todd Horowitz. Todd, have we put a low in lean hogs?
I think so. I think you can pretty much count on for now 100 being the low, and we could start to go higher. You know, one of the problems we could run into in the hog market is, you know, with cattle coming down a little bit, it's a little bit higher today, but you know, when they start to be the same price, then they're going to go for the cattle, right? It's one of those things that we get too close. But at these levels, I think that hogs have room to go to the upside, and I think they should. And that will be the decision that the consumer will be making because of the high cost of fuel. They're going to have to, again, budget in their dietary needs and their family's needs. So it's got to, you know, there's only so much money they can spend, and it's going to have to be spent, you know, where it's most frugal, I think. And I think that's what we're looking at.
Do you think saying the holiday coming up this weekend, is that good timing for some of these lifestyle, let's say beef? Is that something they can use?
Well, typically we're going, obviously, barbecuing season. It should be much better, and we should be much better. If we had a much better economy, I think we'd be at even higher prices than we are now. Yeah, but we don't. But I think you'll see, you know, there'll be some demand, and we're going to see some rise. But I think this goes farther than just this weekend. I think when we look at the bigger picture, you know, we're going to see that these prices, because of inputs and things that are going on, are going to be more expensive, and it's going to come really down to a decision of what the consumer can buy. All
right, that's Todd Horowitz. He's with Bubba Trading in Chicago. Thank you very much for being on the show today, Todd. We're going to bring it back to Nashville so I can throw this over to Janet.